Ladies and gentlemen, welcome back to the channel. Today is a relatively slow day as far as economic data, although we did have pending home sales that came in at one of the lowest numbers we have seen in recent years. We have the second day of Powell's speech as well, the testimony in front of the Senate. Not really getting any new headlines there either. Markets are slowly but surely marching towards a new all-time high. That's when everything changes for markets. Once we hit that new all-time high, it is game on for stocks. Something crazy happens when you get a 20% rally. It's not all too crazy, but you get a lot of bears. A lot of bears don't want to give up on their bearish stance. There's a lot of, biases that people tend to have in general. Same is true with markets. When people are bearish, they tend to stay bearish. Well, when you hit a new all-time high, the chase starts. If you are a fund manager, you cannot afford to be bearish at all-time highs. Okay, you can't do it. You're going to lose clients. You're going to lose money. And, these firms would like, nothing less to lose money, okay? Or lose their clients, which means they would lose fees and lose money. Now, here in this video, I will share with you what the next big driving catalyst will be for stocks that will likely push markets to new all-time highs. I will share with you all of your major events and news of the day today as well. So hit that like button and subscribe to the channel if you have not done so already, and let's get started. Now, Jerome Powell says, quote, "I'm open to the possibility that tariffs translating to inflation will be more or less than we think." Again, this is the second day of testimony from Powell, and you're going to hear a lot of the same things. We are hearing a lot of the same things that we heard yesterday today. Powell didn't really give us new information yesterday, so it was kind of a nothing event. Now, on X, Elon Musk says that Optimus V3 is going to be the hand emoji. This account says, "Is Optimus going to run a Grok voice assistant?" That would be pretty cool. Elon Musk says that it already does. Now, the Tesla Model Y has been named Australia's best mid-size electric SUV in the inaugural 2025 Car Expert Choice Awards. It beat out the BYD Scion 7 and Volkswagen ID4 for the title. Car Expert says, quote, "It still has that flashy technology, but minimalist styling Tesla is known for. But the cabin is now a more appealing place to be, and the ride is more comfortable. If rivals had finally caught up to the pre-updated Model Y, Tesla has moved the goalpost again." A huge 1.6 gigawatt hour, $460 million Tesla Megapack battery energy storage system in Victoria, Australia is about to be turned on, touted as one of the largest BESS projects in Victoria. Now, in the news today, Donald Trump says that Powell is a very average mentally person. Which is a hilarious way to put it. He says on Powell that he thinks he is a very stupid person, actually. He says that he will negotiate directly with Spain. And Trump says that he has already begun interviewing the next candidates for Fed pick. Trump says he knows 3 or 4 people that he would pick, and it's really about narrowing it down at this point. Jerome Powell says that fiscal policy can add to inflation, but I don't comment. And Donald Trump says the U.S. will meet with Iran. He says that we may sign the Iran agreement next week. Donald Trump says it's possible that Putin has territorial ambitions beyond Ukraine. The DOJ files brief in appeal of ruling finding tariffs illegal. And Donald Trump says, "We think the Iran-Israel war is over." Now, I do want to share this clip with you from CNBC, from Piper Sandler, that says the Russell 2000 will likely hit a new high before mid-October. If they're expecting a new high by mid-October on the Russell, then that means you're risk on into the end of this year, which is my view as well. Take a listen.
S&P very close to a new all-time high, the NASDAQ 100 hitting a new closing high. And in this environment, you're actually raising your recommendation for equity exposure, just a very slight amount, from 97% to 98%. But generally, when stocks are at record highs, valuations are elevated, people are looking to possibly move away from stocks. Why are you getting more bullish?
Frank, when we think about all the negativity that we've seen so far in the first half of this year, it's been incredible. between tariffs, between geopolitical, between budget issues, all these things. The market has shrugged it all off. The market is telling us a pretty solid message that it wants to continue to keep going higher in here. And the only way to sort of reverse that negative sentiment is going to be through new highs. And that's exactly what we think is going to play out. And that's why we've continued to increase our recommended equity exposure. And that's why we continue to reiterate our year-end objective of 6,600 on the S&P 500.
All right, Craig, I'm not going to make it easy for you. The tech sector hit a new all-time high yesterday. So outside of tech, what other sector do you see moving us to these new all-time highs?
Well, we have to have financials working. That's going to be a key part of this. Financials continue to keep working. You look at stocks like Charles Schwab. You look at stocks like Robinhood on the brokerage side of the world. You look at Goldman. You look at the big major money center banks. They continue to keep working. Beyond that, also take a look at the industrial companies. Even some of the pre-market movers, Frank, you were talking about here this morning, fit into that industrial sector with Lennox and some of those others. And then also the service companies. Lots of names on the payroll processing side of things. You got PayPal, that's been a constructive looking chart. Frank, there is no shortage of constructive looking charts. And I think that's an important message we need to pay attention to.
All right. You also seem to like small caps right now. You say there's a technical reason. We're going to show the chart, the 100-day moving average and the 200-day. I'm looking at it. The stock is above its 100-day moving average, but it seems to kind of hit resistance right at that 200-day moving average. At least it did a few weeks ago. What's the technicals that you're seeing here that's making you bullish on the small caps?
Right. When we go look at the chart of the Russell 2000 and you look at it on a weekly basis and go back over the past, say, 24 to 36 months, it has made what I would define as a pretty impressive inverted head and shoulders bottom. And the time frame, when you look at how long it took to set that up to the time frame of where it will ultimately play out, we see about 16% upside. And Frank, I'm not mincing words here, but the Russell 2000 is very likely to make a new high and probably will do so before mid-October.
All right, I want to put that in context. You see it hitting, moving 16% higher, but the S&P you only see moving 8% higher. So you see
Correct.
Small caps significantly outperforming. In this environment, we have tariffs. We're not really clear on Fed rate cuts. There's some talk about July cuts. What's the catalyst? What moves these small caps higher?
Well, the fact is that a lot of these small caps really got beat up in the downturn in April. We saw the Russell off over 30% from the highs, and now we're starting to see the Fed signaling, but perhaps that they are going to lower rates. The inflationary pressures are coming down. The economy has been a lot more resilient than people have been thinking about, and we're seeing from a chart perspective a broadening of the participation of this market. So if you're looking for opportunities that haven't already been exploited, you're probably not going to find that in the Mag 7. You're going to find that down cap. And then also, Frank, fear of missing out, FOMO. The FOMO trade is full on at this point in time. There's a lot of managers that did not get out of the way in the downturn in April, did not re-engage in this market as you got into the May and June timeframe. And with the market making new highs, the pain trade is squarely up. They need to play catch up, and your better opportunities are down cap versus trying to go and play, say, Apple or Microsoft at this point in time.
You're also underweight transportation. We're just coming off FedEx earnings, looking at FedEx, and the pre-market is down, and that's based on current quarter guidance. You look year to date, FedEx shares down more than 20%. But if you look at transportation more broadly, I like to look at the IYT transportation ETF. It's up about 0.5%, underperforming, but still up 0.5%. Why underweight transportation when you're bullish on small caps? Aren't they very closely tied?
Well, they're a small part of the overall index. The bigger part of the index is going to be industrials. It's going to be technology. It's also going to be healthcare and also financials. And the parts that are the larger components inside of the Russell are likely to be a bigger driver of this. If I look at the IYT as an example, it's been showing sort of poor trend, poor relative strength. So lots of competition in the transportation sector, whether it's airlines, rails, or even some of these delivery areas. There's just better opportunities elsewhere, and it's not in transportation.
But Craig, in all fairness, aren't both very closely tied to U.S. growth, U.S. economic growth? They're both really domestic plays, especially when we're talking about transports. Yes, they have exposure to overseas shipping, but the majority of their revenues really come from moving freight here in the U.S. So if you don't think those companies are having higher revenues, why do you think the other domestically focused small caps are having higher revenues and higher earnings?
So when I've gone back and sort of dug into that exact rationale, there's a lot of competition on the trucking side of the world that needs to be addressed. They've been very competitive on their pricing side of it, and that's been creating the challenges on the transportation index itself. And then also, we do need to see fuel prices come down for the airlines, and that would be helpful for them. The recent surge that you were talking about just before this segment, Frank, about oil prices going higher, has certainly led to higher prices and higher ticket prices. So that has also been a little bit of a margin squeeze for some of them.
I do think that was kind of the best approach here. You want to look at the smaller names, in my view, instead of moving all the way up to the top of the market cap spectrum in terms of what's going to drive the returns in the next 6 months as we get interest rate cuts, as we get less inflation, a more dovish Fed, tax bill figured out, trade deals, blah, blah, blah. I think we're really heading into another wave of euphoria with in terms of higher growth names, AI stocks, smaller caps. Like, sure, is Apple and Microsoft and Google and Amazon going to participate? Probably, but to what extent? Probably not the same extent as those other smaller areas, at least in my view. I do agree with him heavily on that opinion. Tomorrow, we are going to have potentially the next catalyst to send markets to new all-time highs. We're very close to that point as of now. We're going to have durable goods orders month over month for May. You're expecting positive 8.5%. Last month was negative 6.3%. Okay, so that's going to be a very important data point. The stronger, the better. Okay, GDP growth rate quarter over quarter, final numbers for Q1. Again, if that comes in not as negative as it looks like right now, that's also going to be fantastic. Now, on Friday, we're going to get core PCE month over month, personal income month over month, and personal spending month over month. Also, could be the catalyst to drive markets to new all-time highs. And again, once you get to new all-time highs, that's when the chase really starts in markets. And I think the SPY is going to hit 700 by the end of this year. I know it's only about a 15% rally from here. It looks and sounds like a lot more. That would be like a 35% rally from the lows, which definitely sounds pretty dramatic. But I think you should be prepared for a larger rally. I don't really see the negative bear view on this market as of now. So let me know your thoughts on all of this down below in the comment section. Kind of a slow day, all things considered. You guys have a great day, and I will see you in the next one.